The Chinese ride-hailing giant Didi only came to the US market at the end of June. But since then, their share price is down by 35%. So what next? Given the slide, is this a buying opportunity? Or actually, given the current climate around some of these Chinese tech stocks, are there further slides to come? I thought it would be interesting to do an update on Didi. Clearly, we don't have that much data. It only came to the market on the 30th of June, so it's been trading for only slightly more than a couple of months. But given some of the recent news and the move in the stock price, I thought let's take a look at it in a bit more detail. You can see the first day of trading was here, the 30th of June. It did briefly move higher the next day, trading near $17. But since then, we've seen a slide of the stock almost hitting $7 by the end of July. So as usual in this video, I'll talk about some of the recent news, why we've seen it hit so hard. Could it get worse? Then we'll come back onto the charts and take a look at what we have in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought this time around on the stocks channel, we'd take a look at Didi Global, basically the Chinese rival to Uber is perhaps one way of describing it. It's been a really interesting story over the last couple of months. Not so good, I think, for investors who bought on the IPO, but more about that in a second. So as usual, in this video, I'll talk a bit about some of the recent news around the stock. It only came to the market over the last couple of months or so, end of June. Then we'll jump onto the chart for what it's worth and take a look at some of the technicals. We don't have that much data, but I think then we can at least see how all of this news, the sort of volatility, is delivered to the stock. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It's a new channel for us, and it means we can continue pushing out lots of different content throughout the week on all these different stocks. Right, let's get into it and take a look at Didi in a bit more detail. So as I said, it's a ride-hailing giant from China, and perhaps the easiest way of pigeonholing it is thinking it as an alternative, a competitor to Uber. It was founded back in 2012. In 2016, the company actually acquired Uber China. Uber was losing lots of money in China, and I think that the company came up with a decent offer. As of Uber's listing in 2019, the company still owned something like 15% of Didi. But what's interesting, I think, is the news in recent months. Didi IPO'd at the end of June, so was listed in the US. At the time, it was the second largest Chinese offering after Alibaba. But the share price was under pressure almost right from the start following that listing. So in July, we saw the share price slide heavily as China cracked down on various tech companies because of data security, and Didi was not immune from this. As a result, Didi saw its app being removed from various app stores across China. Existing customers could continue to use it, but of course, this massively affected the company's ability to bring on new customers. Not surprising, competitors have been taking advantage of this with the likes of Cao Mobility earlier this week, raising $600 million from what are mainly state-owned funds, so looking to expand and take advantage of the position at the moment. Just as recently as the last week, there were rumors that Didi could end up being taken under state control, although these were denied fairly quickly by the company. So where does that leave the shares? Well, we're not even 3 months past that IPO, and at the time we're recording, the stock price of Didi is down by 35% from where it was trading on the first day of trading at the end of June. So a very disappointing performance for any early investors. So there is so much unknown and unclear at the moment, with perhaps even the threat of it being delisted in the US. Didi remains an incredibly highly speculative stock, I think many people would say. If things turn out okay, we could see the stock price clearly rise dramatically from here. But if they don't, who knows where it goes? We'll take a look at the charts in a second, take a look at things in a bit more detail, and perhaps try and come up with some potential ideas. But some of the big levels to watch, let's talk about those first of all. So the high since the IPO briefly traded as high as $16.90 following that IPO at the end of June, but has been in decline since then and various barriers left on the way down. The most recent of these for me, just above $10, $10.45 from early in August. On the downside, the low hit since the IPO is just ahead of $7, $7.10. That might be an interesting reference point if someone was feeling particularly aggressive in terms of being a buyer. But as usual, to put some color on these numbers, let's jump onto the platform and take a quick look at the charts. I'd be the first to say technical analysis and charting doesn't really make that much sense when we've only got 2 months or so worth of data. But let's take a look at what we do have anyway. So this is the daily chart. I suppose an aggressive move, if you thought that actually the worst was out of the way, would be to take the view that in late July and later on in August, we saw the price make a base ahead of $7. So I think for those who are perhaps thinking about trading the stock in the short term, and perhaps stop losses the other side of 7 could make some sense. Looking at the RSI down here, again, when it hit that sort of $7 area, we did see the RSI go pretty oversold on both occasions. We've seen some stability since then. Let's take a look at the short term to take a look at the trend. If you look at the trend off the highs, looking at it on the hourly chart, which is what we have here, each candle represents an hour's worth of trading. Again, we could take the view that perhaps the worst is behind it, but clearly I think this is going to be very much, in the short term, potentially a news-driven stock, depending on what happens with the situation in China and also the situation regarding the US listing. You can see how investors have sort of stepped in the $7 to $8 area. That has been a good base for the stock. At the time of recording, it's trading around $9. So if you thought there was going to be more to come, perhaps one target is a run above up to sort of $10.50, the highs that we saw in early August. So maybe $1.50 higher from here. But let's see, we'll come back to it, I think, in the next couple of months when we've got a bit more trading data for the stock, perhaps a bit more clarity. But one way of looking at this is that the worst from a trending point of view seems to be over for now, but it does remain clearly very vulnerable to any sharp movements, depending on how the news flow goes from here. That's it for the update. It's been a fascinating story over the last couple of months. We'll come back to it in the months ahead and do an update if things change. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.